Yesterday, the euro and the British pound surged against the dollar, driven by US statistics. Annual consumer inflation in the US came in at 3.2% in October, slowing from a 3.7% gain in September. On a monthly basis, the consumer price index remained unchanged, following a 0.4% rise a month ago. This raised expectations that the US Federal Reserve would keep interest rates on hold and signal an end to its aggressive tightening cycle at the December meeting. In addition to US inflation data, traders digested pretty upbeat reports on economic sentiment and a third-quarter GDP in the euro area. Besides, traders took notice of speeches by some Fed officials, but they failed to support the greenback. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes UK inflation data. Economists forecast consumer prices to increase by 0.1% in October, after rising by 0.5% in September. The annual UK consumer price index is seen rising by 4.8% in October, following a 6.7% increase a month ago. Core inflation is expected to fall to 5.8% from 6.1% in September. Such data may prompt the Bank of England to hold interest rates steady and halt its long run of rate increases. But the British pound's response may be different. After the release of statistics on UK inflation, sterling will most likely extend gains amid a weak dollar. France and Italy are set to report inflation data as well. Traders should also pay attention to Eurozone industrial production. The focus of market participants will be on US retail sales, which are forecast to drop by 0.3% in October after gaining 0.7% in September. If the reading comes in line with forecasts, this will indicate a slowdown in economic growth, thus adding to pressure on the greenback. From a technical point of view, the 1-hour chart shows that the euro-dollar pair is currently trading just below the level of 1.0880. A decline followed by a false breakout at 1.0851 or 1.0825 will create a strong buy signal, pushing the euro up to 1.0880. If the price consolidates above this mark and tests it from the top down, the volume of long positions will increase further. In this case, the euro may rise to 1.0908 and 1.0938. At these levels, I recommend going short amid a false breakout. Short positions on a rebound can be opened at 1.0959 or 1.0982 to catch an intraday correction of 25-30 pips. If bulls fail to drive the price above 1.0880, a false breakout at this mark will drag the euro down to 1.0851 and 1.0825. The most distant target is 1.071898. At this level, it would be a wise decision to go long on a rebound, counting on an intraday correction of 25-30 pips. As for the British pound, it's likely to gain value on UK inflation data. If the price consolidates above 1.2502 and tests it from the top down during the European session, a strong buy signal will be generated. Thus, sterling will advance to 1.2543 and 1.2581. At these levels, traders are recommended to go short on a rebound to catch an intraday correction of 25-30 pips. Going short at 1.2502 will be relevant in case of a bullish reaction to inflation data followed by a return below this mark. In this case, one can count on a slide to 1.2459, 1.2425 and even 1.2394. At the level of 1.2459, it will be possible to go long amid the false breakout. Long positions on a rebound can be considered at 1.2425 and 1.2394 in the hope of an intraday move of 35-40 pips. Best of luck!